Hello, I am Lisa J. Stocks, and today we're going to be talking about what went on Wall Street today. So let's take a look. The Nasdaq and the S&P were down today, and there were lots of names influencing the moves. We have Google, Amazon, of course, SpaceX down on the day, while others were thriving like Micron, Intel, and Sandisk. Take a look at the heat map. So we're definitely seeing something different nowadays when it comes to our stocks. It's been like this for a while. The trend has definitely shifted with the Mag 7 over into a strong amount of our holdings, our largest holdings, those top companies with the largest market cap being in technology. And so that's where the money is. And, the market, it goes up, it goes down. There's going to be days, I don't look at my investments. I don't get stressed about movements of the day. I definitely look for opportunities. I don't get nervous because I know I am a long-term investor. And so I'm still in the building phase. And so I'm ready to take advantage of opportunities when I see them. So some news that moved the market a bit today. We see that Micron, for example, which is going to be having their earnings coming up on Wednesday, up 6.82%. And there are headlines going on about Micron. Shares rising today on some news about a partnership with Anthropic AI. So that's another IPO, highly anticipated, just like SpaceX, that should be coming very soon. And Micron is a name that we've been hearing a lot about lately. So before we get further into this, I'm going to talk a little bit about the new additions to... Oh, Daryl, I see you there. You're about to get on a plane. Okay. You can catch the replay next week whenever you're back from vacation. But we're going to be talking about some new additions to the S&P as well as the Nasdaq today. And what that means for our ETFs. Just a look at those companies that had to have that big influx of buying because they were added to the indice. And so the S&P, my S&P holdings that I have been able to gain exposure to it through our VOO and FXAIX. I do not hold any Nasdaq ETFs or mutual funds, but we're going to use QQQM as our reference to set our bar and just take a look at how it's doing on the day. But actually, I just had the map up here. Let's remove this for a second and go back to this. So the Nasdaq ended the day down 1.32%, and the S&P was down 0.37%. But it's that time of year when our funds rebalance for us. They make these changes and it shows us what's thriving and what areas are not going to be the focus of Wall Street right now. And so when it comes to the S&P 500, they removed 2 companies and added 2 companies. And so the 2 companies that were removed are Pool Corporation, ticker symbol POOL, and Campbell's. So definitely slower growth different areas that we have not seen thriving when it comes to the stock market. While on the other end, we're going to have additions to the S&P of Marvell Technology and Flex. So we're going to see the theme going the same, whether it's the S&P or the Nasdaq, of companies related to AI, definitely all the different aspects of the ecosystem. It's developed so much more than just hearing about NVIDIA. That's how it was a few years back, but now it's grown so much, and there are so many different elements that need support, that we're seeing changes when it comes to developments when it comes to that AI space. And then, of course, space technology with the addition of companies like Rocket Labs. And we just had this huge IPO with SpaceX recently. So this is where the slower growth is those companies that we would know for actual pool equipment, and then canned soup. This is what we know these companies for, the ones that are out. So definitely something different, everything has moved into AI, semiconductors, data center hardware. This is where all the money is going. All right, so let's see. What else did I have here? Yes, so pool equipment, consumer staples, housing exposure, traditional industries. That's where the slow growth is. But like I just said, all the higher growth potential is in AI, mostly predominantly in AI, but now we're seeing so much of a push when it comes to space also. Okay, guys, thank you for tuning in and chatting. So I'm streaming both on vertical and on the regular side, so you might get a better viewing experience if you're able to shift to the other live stream if you prefer. So YouTube police is sharing that you are heavily into tech. It's growing the fastest, and you're getting old. It seems like the smartest thing to do. Okay. Hello, Nemo. I'll probably shift to the widescreen. Okay. Yes, guys. If you're able to shift over to the widescreen for a better viewing experience, you can go ahead and shift over there. Now, let's run through some more detail when it comes to the companies that are added into the S&P. Let's take a look at them on the chart. So when it comes to the S&P, we have Marvell Technology. So actually red on the day, down just slightly, less than 1%. But let's go out 1 year on this one, up 334%. So yes, easily at a glance, we can see why this company has made this move and stepped up, knocking some other companies out of that top 500 and being rewarded for the amount of growth, the being profitable and being added into the S&P, as well as, of course, being a part of what's thriving right now, AI and the data centers, cloud computing, all of those different areas. And then the other company that was just added when it comes to the S&P is Flex Limited. So on the day, it's up about 5.5%, and over the last year, it's up 236%. So these are just going to be, for now, they are quite small percentages in the funds. Like I mentioned, we're going to use for our reference today, VOO and QQQM. But as they grow, we should see them get higher. If they grow and continue to thrive the way that they have, we will see them get higher allocations into our funds. So let's see. Now, Marvell Technology, this is one that Jensen Huang had recently said would be a $1 trillion company. But it has a ways to go. But just getting that that mention and acknowledgement from someone who is so big and prestigious in the space just highlights what the potential is for this company. It currently has a market cap of 266 billion. So it has a long way to go to get to a trillion. But the moves that these companies have had in such a short period of time is just amazing. Looking forward to seeing them having higher allocations in my ETFs, because I don't have holdings in any of the new additions as far as these individual companies that have been added to the Nasdaq and the S&P. So let me just take a look here. So this is just. So Marvell Technology is a semiconductor and data infrastructure leader. And Flex Company is a global electronics manufacturer and supply chain infrastructure company. So yeah, everything in that same technology space are the ones moving up. Consumer discretionary, consumer staples aren't making the cut and are being moved into, more mid-cap and small cap funds, not in that top S&P 500. So now let's take a look at what was added as far as the Nasdaq. And I will take a break soon and take a look at the chat. So guys, make sure to put a Q or highlight any questions that you have. So there's been more movement when it comes to the Nasdaq 100 than the S&P, with only those two additions that I mentioned. But when it comes to the Nasdaq, as of today, June 22nd, they've added 5 new companies to the mix and removed quite a few also. So these new additions are Astera Labs, CoreWeave, Nebius Group, and let's see who else, Rocket Labs. So that's that space company, as well as Teradyne. So all the rest are in that AI kind of a space. So let me go ahead and move this up. What do I have in here also? So yeah, this is where Wall Street is showing us where the money is moving. Oh, I'm looking at one screen and I'm having you guys looking at something else. Let me remove this. All right, so I was running down the 5 companies that are being added here. Okay, so now let's take a look at how these companies have been doing. And I think I'll just concentrate on sharing like year to date. Okay, so Astera Labs over the last year, up 411%. And then we have CoreWeave. Now this one is actually down about 36% year to date. No, not year to date, over the last year. Now going out the last 5 years, it's up 178%. But let's just read through some detail on that, because it's definitely not fitting in with the rest that have just been added. You're seeing that the others have had like a strong run up in the last few months. But also you have to be profitable in order to, well, the Nasdaq doesn't seem to have as stringent rules as the S&P, who will not be adding SpaceX, for example. But let's just read through some detail on CoreWeave, just so that you can get an understanding as to why a company that has not had the best year could be getting added into the Nasdaq. So when it comes to CoreWeave, it says here that it has contracts with Microsoft and Meta, including a $21 billion expansion from Meta, bringing its total contracts to $35 billion. So they have a revenue backlog of nearly $100 billion. So this is a company, similar to the way that I think about Microsoft, that they have a huge backlog of work years out. So we know that even though they might currently be having some struggles and not not have that consumer, the investors are not behind it and supportive of it, and the share price might have some struggles, but it's one that I'm glad is added into these funds and will be getting a higher allocation. And with my example of Microsoft, I just know that I need to just be patient and hold on for the future when it does hit those $600 valuations that it truly should have. So now, did I go through all of them or did I stop when I got to CoreWeave? I think I did. All right, let's go back. So Nebius Group, this is also in addition to the Nasdaq over the last year, up 497%. And then we have Rocket Labs, the only one that's a little different because this one is focused on, sending those satellites and being a part of the space, as opposed to strictly AI and all of that, all of the different elements that run the data centers and things like that. So, and then the last addition is Teradyne. Not sure if I'm pronouncing that correctly, but I'm doing my best. And this one is up 423% in the last year. So, huge moves from these companies. But we're seeing now, like I was saying earlier, it's not just about NVIDIA that, came up, became a leader as far as market cap, surpassing, names that we were very familiar with for many years now, like the Microsoft and Apple and Google. It surpassed them all. But now these other big companies, they have a long ways to go to get to those trillion-dollar valuations that the companies that I just mentioned are at or close to, but they're showing that they're on track for huge profitability. It's not, as these data centers, as AI develops, we need more and more when it comes to networking and connectivity and all of the elements that it takes. So Marvell Technology and these different companies, are where the money is going. This is where Wall Street is rewarding these companies, bringing them into these indices, and it's not just for nothing. They have proven themselves. Micron, the movement on Micron has been just spectacular. It's just like it definitely, looking at the charts on it, reminds me of when I was just getting started with investing into NVIDIA years ago before the share split. It just seemed like it was, around $400 to $500, and in no time it was over 1,000, and then it split. But I could barely find days to have a dip on it to build into my position. But I wind up continuing to work on it, even when I was getting a little frustrated with how fast it was moving. I did continue building up my positions. I have it in 2 portfolios. I have that in my in one of my taxable accounts, as well as in one of my retirement accounts. So in the retirement account that I have NVIDIA, I also have my Taiwan Semi. So they definitely have given that particular portfolio a boost, along with the foundation there, which is my FXAIX, which is another S&P 500 investment that I have. So that was a look at those new additions to both the S&P and the Nasdaq. So with that, those retirement accounts, the indices had to go in and just buy up shares in order to get representation into these companies, and then obviously decrease other areas, because this is the current mix. Both of these funds do rebalance quarterly, so we'll have to be on the lookout again in the next 3 months to see how these new additions continue to thrive and, come up as far as allocation inside of these funds. And we will see what new additions or companies are removed, again, as always. But because these have just gotten in, my hope is that they remain profitable. They had to prove themselves to get this far. So we have these companies that are helping the AI servers. We just went over some of those contracts that CoreWeave has secured. Rocket Labs, so they are focused on launch services. So just the world has just changed so much. It's the consumer staples. There will be times that those areas do thrive, especially, we saw ExxonMobil and some other companies. Definitely financials. There's a space for everything, but my portfolio is definitely heavily weighted towards technology because of the funds and individual stock choices that I've made. All right, so I'm going to take a break soon, but before I do and go through the chat, please feel free to ask any questions and share any comments or thoughts on what we're talking about here today. But I try to post, especially most of the time, try to post the earnings calendar anytime that there's at least something notable to mention as far as earnings. And this week, Wednesday, it will be Micron. I named a few others here. We have Carnival Cruise, FedEx. But when it comes to Micron, they'll be reporting after the close on Wednesday. And this stock has had those gains today, as I mentioned earlier, on a mention or headlines related to a partnership with Anthropic. But it is an earnings week, so I'm expecting a lot of volatility potentially, because even when these companies have great earnings, we just never know which way it can go. And historically on this one, we can probably expect a pullback even with strong earnings. It doesn't seem like that would be logical, but we've seen it so many times with even bigger names than this, NVIDIA, for example. So let's see. What else? I'm going to take a break now and take a look through the chat. And just I wanted to mention, and our QQQ and VOO. Now they have relatively low expense ratios. VOO at 0.03, definitely low. QQQM is 0.15%, and so these are ways that you can have exposure directly to these indices. Over the long term, QQQM, I have to use QQQ to get a longer history. I always forget that because I like to always stress, even though they have lowered the expense ratio of QQQ from, I think, 0.20 to 0.18. I always like to stress that, in my opinion, QQQM is for investing. VOO is for investing, while SPY and QQQ, those are go-tos for me when it comes to trading. But QQQM hasn't been around as long, so we can't get we can't get to the 10-year as far as comparison on the charts. But just to highlight over the last 5 years, let's see, QQQM, the Nasdaq ETF is up about 121%, and then VOO, the S&P 500 is up about 90%. So, but yes, still going to be heavily weighted into many of those names that I mentioned. Micron Technology is in the third position when it comes to QQQM. So it's definitely moving up. It's in the 10th position when it comes to VOO. But those new additions are not, we're not going to see that in the top, anywhere near the top of the funds yet. So it will take some time. All right, so I'm going to take a break and go through the chat. If I missed anything, please feel free to repeat your question. Hello, Nemo. I'll probably shift to, okay. Okay, thank you for that reminder. I hope everyone here has given the live a thumbs up. Okay, so I see a comment here. I may switch some of my investing to go more into VOO when I get closer to retirement. We'll see. Yes, that's definitely a way that you can go a bit more conservative. It's definitely what I plan on doing. Not necessarily VOO, but something maybe more focused for income, higher dividends. When I'm more focused on wanting to preserve my money and be able to make sure I have a reasonable way to judge how much income I can draw from it. Okay, so CHPY at $54, and it's been great. The weekly distributions. Okay. Wish I could hang around and chat with you. Okay, all right. Wasn't CoreWeave added fairly recently? Yes. CoreWeave is one of the, let's see, CoreWeave is one of the new additions when it comes on to the Nasdaq side. So these are, these are the companies for this quarter's additions. I have had some substantial success in Nebius, but sold that to buy more CoreWeave. Okay, all right. Yes, I am aware. I had this IPO last year, I believe. All right, I'm just taking a look through the chat. Let me know if you guys have any questions. It's still growing by leaps and bounds, not relying solely on one or two major customers. I think you might have been talking about CoreWeave at that time. The volatility is a good thing, allows us to buy when lower and share a little profit when it goes up. Yeah. So guys, did anyone here buy any shares of SpaceX? I only do my trading in my retirement account to save the tax implications. Okay. All right. Thanks for sharing. I actually have not done any trading out of my IRA. Just personal preference. And a lot of the trading that I do is options trading. So I wouldn't be doing that. I have all of my long-term accounts at Fidelity, and I wouldn't be options trading out of my Fidelity account. Just not the right fit for me as far as the way that it moves. I like to do it. I've become accustomed to doing it on Webull so that I can adjust my stop loss and just move more quickly in getting in and out of my trades. But if I was going to consider, doing some shares, I would consider doing that. But it's very rare that I do that. But if I do going forward, that might be the place that I do buy shares and then not hold on to them, put on my stop loss so I can get kicked in profit. All right, what is that emoji? I will have 5 paydays in July. Okay. I forget what they call that. I was never very Fidelity trades exceptionally fast. Okay. Okay. I often just use the app. All right. Just taking a look through the chat. I don't think I see any questions. Yes, I was talking about CoreWeave. Yeah. Right. The funny thing is I don't plan on utilizing my portfolio. It's just there. It's just there for me to play with. Consider this now. The institutional investing will have to invest into CoreWeave just to keep things in line with the S&P 500. Yes, all of those companies are going to get a huge influx. So yeah, talking about the pay structure of getting 5 paydays in July. For my first job I worked at a company for many years, and I got paid twice a month. I got paid on the 15th and the last day of the month. So when I left that company and got paid twice a week, every other week, twice a week, however you say it. Yeah, I noticed, I felt like, oh, this is different, because I used to stress to people that it's different getting paid twice a month than every other week, because when the 31st is like on a Tuesday or something, or just it being a month that has 31 days, it just felt like forever to get to that next payday. But I became very accustomed to it because I was working at that company for a long time. So it was very luxurious to go to the next company and get paid every other Friday or every other Thursday. My wife gets paid once a month. I get paid on the 15th and the last day of the month. Yeah, I think that's a miserable pay schedule, but I lived through it for a long, long time. So I was definitely used to it. I had gotten used to it. Um, but when people would say it's the same, people would kind of say to me like it's the same thing. It's not the same thing. Definitely not the same thing. I feel SpaceX has too much ex- exception around it. Yes, definitely, definitely. So where is SpaceX here on the chart? Down 16.43%. It's down to $154.60. And yeah, I didn't even pick up one share yet. And I if I had even gotten one share at say 160, 180, 200, whatever price, if I had bought it, I would just hold on to it and just deal with the fluctuation, even if it dipped down below $100, because I wouldn't have put a substantial amount in because it's something new, and lots of people that I knew that were trying to trade and trying to get in on that first day only got filled for very small amounts of shares. I talked about this in my live last Sunday. But to get in so quickly, and I believe what I'm saying is accurate, to get in so quickly, and some people have already sold their shares, that's just going to have a mark on them for future IPOs. And if they want to continue doing that, they may not be able to do that again with Anthropic or OpenAI or other IPOs in the future, because they did not even hold on to their SpaceX for even 2 weeks, which you needed to hold on to it more of a length of time than that. But the volatility is definitely there. I like volatility, but when it drops, and sell when it's up, just don't sell it at all. I try to hold on to a core. Okay. Hello, David. Good evening to you. What is the hot stock, LOL? You tell us, David. We've looked at lots of hot stocks, all of the new names besides CoreWeave, all of the new names to the S&P and Nasdaq were very hot stocks. They have made quite a splash in the last few months and showed their strength. So some other names on the move today, I think, were Intel and Sandisk. Can we see them on this chart here? I don't know if that shows specifically, but yes, the indices were definitely pulled down by those companies with larger market caps like Google and Meta. SpaceX, not so much because it's not in the S&P and not yet, maybe not until next year as far as the S&P, but we shall see. All right. Okay, so happy Father's Day to all the fathers out there. I think we are officially into summer now, so happy summer, happy Juneteenth. I missed lots of things over the last weekend. Okay, let's see. My index funds are doing well recently, yes. Mine are too. Are you a full-time trader? No, I am not a full-time trader. I am not a full-time trader, but I do option trade frequently. But mostly what I share here is my journey to focus on long-term investor. I would say I am maybe 5% trader, 95% investor. Okay, so David and YouTube police are chatting about a fund or a stock. So YouTube police is sharing, I spend less than I make, so I am really living paycheck to paycheck. Hey Tay, thanks for tuning in. All right, so I have a comment here. I'm in my mid-30s. What's the best way to save for retirement? You know, it's funny that just that word, whenever I talk about retirement, I try to do my best in my lives and my videos to always use the word of invest for retirement, not save. Because investing and saving, I want to just I always try to just stress that it's two different things. And so step one, something that you can do. Do you have a 401k, a 403b? Do you have something built in through your employer? Take advantage of that. That's what I would always encourage. If you don't have that built in for you, then you can get started by opening your own Roth IRA at a big brokerage company, perhaps Fidelity. That's where I have all of my long-term accounts. And then from there, get an amount that is scheduled. Get a deposit scheduled on an automatic basis. Take some time to I would say just you get started with a basic, broad, low expense ratio index fund. One of mine that I do over at Fidelity is FXAIX. There are other funds that you can mix in with that for additional growth. I think the person said they're in their 30s. You definitely have time to to grow your portfolio. I don't know at what age you plan on retiring, but those are some first steps there. Maximize your employer plan. Don't just go by whatever you're defaulted into if you do have a 401k. Let's see. Thank you, Vincent, for that super chat and for tuning in. Happy Monday evening. Yes, I'm mixing it up. I missed my Sunday live on Father's Day yesterday, but trying to get back to that person's comment. Yes, here in my 30s. In my 30s, what's the best way to save for retirement? If you're still here, if you want to share any more details as to what you have going on so far, but definitely take advantage of your company plan. But don't just sign up for it and choose a percentage and that's that. You have to do a little bit of work to find out what are the offerings. I don't want you to be in a fund that I wouldn't want a 50-year-old in at 30 years old. So there's a little bit of work to be done to maximize your employer plan. If there isn't one, you can do it on your own. We can't wait for that job when you have a 401k or 403b or whatever type of TSP, whatever type of retirement investment plan is available to you. Don't wait for it if you're not in that type of industry that it's offered for you, if you work part-time or whatever your circumstances are. If it's not built in for you, open up your own Roth IRA, get that deposit, automatic deposit scheduled, get an automatic investment scheduled into a fund that is going to have you on track for steady growth, quarterly dividends, nothing with any high fees that's going to be eating away at your returns. I definitely have videos on my journey and a few of my portfolios that I have built up over at Fidelity. So hopefully you shoot me some more questions and I can share more on that. Okay, you are still here. I have an annuity set up through my employer. I don't really know the details. Thank you, by the way. One more question. What are your thoughts on life insurance, term, whole? I really don't share anything about life insurance here. I think you should talk to a professional on that. It's not something I share here. I do think it's an important element. I don't consider life insurance to be an investment. And really what I talk about through this channel is investments. I think of life insurance. I do have life insurance, but I think of it as, and it plays a part in my financial, stability as just the death benefits and making sure that you can cover everything that you need to in a single household, as opposed to being in a household with multiple people working, as well as the potential to leave something for the next generation. So, but I really don't share on that topic here on the channel. Yes, and as far as an annuity through your employer, I would encourage you to take some time and get an understanding if that is the only offering. Just like we're talking about today, we were talking about new additions to the Nasdaq and the S&P. You can try to use the Nasdaq is higher performing than the S&P 500, but these are things that you can use as a bar for any account. So if you look at your investment account, your retirement account, you can use the performance of the S&P over the last year to say, or the Nasdaq or something like this, to say, how is my account performing in comparison? Am I beating or am I severely below this? So this is something I definitely encourage people to use as a standard for yourself, because if you're just saying, I don't want you to just contribute to the 401k and don't even know the performance, don't even know all of the offerings that might be available to you. And another thing I was going to mention is, as far as goal setting for yourself, take some time if you haven't done it. How much do you currently have in your investment portfolio? How many years to retirement? I usually will use just a 10% modest rate of return here, and figure out, play around with this and set goals for yourself. Do you want to create $1 million plan for yourself? That's what I sat down and did for myself a few years ago. So, and I still have that screenshot in my phone. It's in my favorites, and I go back and I look at it, and I can go anytime I want. I do not have nearly $1 million when it comes to strictly stock market related investments. But I know that over time, what amount of time I need to continue building and holding on for in order to achieve that. So if you haven't, you've never checked out any of my videos or lives when I've used this is something that you can do in order to, set a goal for yourself and see what you're on track to achieve based on what you already have and what you plan on continuing to invest. And another way that I always like to encourage people to potentially use this is for, bringing the kids along with us on this journey. I was just watching a live this morning, and the person, he gives his 2-year-old daughter $50 a month into her investments. And he is a very active hands-on trader. So I'm sure he's creating a pretty, aggressive portfolio for his little girl. But I just put in here starting amount of 0 for 18 years at a 10% rate of return, $50 monthly. And let's calculate to see what that comes out to. All right, so you would have contributed $10,800, and the interest would be a little over, close to $1,800. So this is $28,591. And like I said, this is a modest rate of return. The average that the S&P 500 has given, but you definitely can achieve higher returns in this. And this is just an example that you might be able to adjust it to what you can do. But I love touching on this topic because we are always out here with the games and the sneakers and clothing and getting hair done and all of those material things. At the same time, can we be putting into our children's future? I know when I got started with college, or, when I was in my 20s, I bought my first home when I was in my 20s. There was no investment account. There was no head start for me. And, it doesn't have to be anything substantial. But, at the same time, there's so many things that go on through the year. I know we all have different traditions and different holidays that we might celebrate. Maybe one person out of the bunch can, instead of the Easter baskets and all of these toys and things on Christmas and birthdays and things like that, they can be the designated one or rotate of who's going to be contributing to help build up the children's future for college or otherwise. It doesn't have to strictly be 529 for college. There are custodial accounts that can give that child more flexibility in the future. The million, think an average of 200,000. Most people will never hit a million. I think only 3% have reached a million. Well, if the having taking the time, hearing something like this, learning something like this when you're in your 20s can show you what you would need to do. I know when I was in my 20s, or in my teens, I was not aware of I need to invest this much in order to achieve a certain amount in the future. So, the sooner you learn, the more of a chance you have. And I'm not saying, and I definitely encourage people. I had someone that is, I think, about 51 or 52 reach out to me recently. And I'm definitely encouraging her not to feel like it's too late to get started investing. But something is better than nothing. And I don't want her to feel discouraged, even though she's getting started a little bit later. I share this frequently. So if you heard it before, you heard it before. But I started working full time when I was 19 years old. Obviously, I did not have a college degree at that time. I didn't get my college degree until I was nearly 30. So I was working, but I wasn't making a substantial amount of money. I did not have a skill that commanded me to be able to have substantial earnings. But from that point on, I was always contributing to my 401k through my employer. So I kind of got a bit of a head start there with investing earlier than some. Okay, I didn't start saving until 59 and a half. I got my degree at about 30 as well. Okay. Okay. So you passed the police test later in life. I think I was asking you one day about your journey. Yes, I know I shouldn't stop you from reaching for it. I If you don't work towards it, it won't happen. Yes. Yeah, but what you said, it's statistically definitely correct that many people are only in that $200,000 range in their late 60s or mid 60s. So it's not the norm. But we definitely need more than that. And we're constantly seeing. I was just I have to get maybe I'll go live again tomorrow or sometime soon, because there was I was looking at a story on CBS News about the anticipated decrease to our Social Security by state. And we have to be ready for that. We cannot rely on thinking that Social Security, pension, potentially, that these things are going to be enough. Certain people, if you are in law enforcement or a teacher, or you know for sure that you have that security, as well as what you're building on your own, and as far as your investment accounts that you can draw on later in life. But a lot of us do not. So we need to be putting in the work. Okay, let me take a look at the chat again. Zero, hello, hello. I was 50 when I went through the academy and graduated 10th in my class. Yes, yes. I remember that story because I was asking you about the physical part of passing the tests at that age. Okay, I heard I tend to be an overachiever. Or is that an underachiever? Not sure. Okay, I'm taking Lisa. Are you still adding to Microsoft? What are your thoughts on long term on Microsoft? Microsoft, yes, I actually have added to my Microsoft and Meta positions. So I have both of those in two portfolios now because I started new positions in both of them. So let's uh, and I was kind of comparing Microsoft's situation to what I was reading about CoreWeave earlier, that they have a substantial amount of years out of contracts. So right now, their AI spending and just the sentiment around the company is not good, but I believe in them long term, and it's currently $367, but it's, let me see if I can find a page that shows it here. But I believe the Morningstar rating on it is $600 flat. So it has a substantial way to go. And I think it can turn around and be a real standout in my portfolio, just like Google did over time. Yes, I was able to get it up here. So yeah, the fair value estimate is $100 a share. And like I said, how much did I say it is? MSFT. Now this one has been, it's been trying my patience. But I'm willing to hold on. And yeah, still with this and Meta are positions that I'm still adding to. Another one that is currently in a good buy range that I'm considering adding to is another one of my, old school, very classic blue chip stocks, which is Amazon. But I'm sticking, I already have positions in all three of those. So what I'm going to do is uh, I'm trying to rely on my funds for some of these other areas of technology that we've been taking a look at today with some of these new additions to the S&P. And so two funds that I've been working on building out is my SPMO, which I'm pretty much probably going to be at a stopping point pretty soon with that one, so that I can put some more focus into SMH and potentially a new ETF for my portfolio. But Micron, which we've touched on today, and earnings coming up on Wednesday, is heavily weighted into both of these funds. And I've had pretty strong returns. And SMH, I just added it to my portfolio in January of 2026. And then SPMO was just added late 2025. And I've already had, pretty substantial gains. And don't want to have to, I'm just trying to find the right balance for me. I don't want to have 50 individual stocks that I have to stay on top of when it comes to building my portfolio. So I have to rely on some funds. And also, I have to do what works well for my budget also. Because I'm a person that not just because I don't want to have to do the research and stay on top of what's going on with so many individual companies. I like to have, it might not be significant to you, but when I start to build on a position, I don't want to just have a half a share of something. I want to, in time, depending on the price, because some of these different companies have drastically different share prices as well as the fund price. SPMO is significantly lower price than SMH. So stock price between these funds right now, SMH is $669 and SPMO is around 160. So obviously my share size was able to build so much quickly when it comes to SPMO. It took me 10 weeks of $10 daily, I think, just to get to my first share of SMH in my portfolio. But whether it's a share size goal or a dollar size goal, I want it to be something substantial, impactful within my portfolio so that when it moves, I'm actually going to see a significant improvement when it comes to boosting my portfolio. Okay, so let me take a quick station break. If you're new here and you're not already subscribed to the channel and you've been enjoying this conversation, please take a second, subscribe, give the live a thumbs up. When you see my videos, make sure to hype, leave me lots of comments, and check out my referral links. They're always in my video description, usually pinned in the comments. You can support the channel by becoming a channel member, using my referral link for the Moomoo Investing app. There are several ways. I'm looking more into developing a cash management account, but think I can do the same thing with my brokerage account. Not sure would save me from having to transfer money. Yeah, so Fidelity is definitely, you know, their APY is pretty much in line with what I get in my high yield savings account, money market account. So I definitely have no issue with having cash sitting on certain brokerage companies. Moomoo has also, their cash management has not disappointed. You do get 8.1 APY for the first 3 months. And then after that, it comes down to just like the regular rate that we usually have for our brokerage accounts or high yield savings accounts. But yeah, I definitely have no issue with leaving cash on my brokerage account that I'm going to use for trading or dollar cost averaging into funds, as long as that APY is the same, as opposed to having to transfer all the time. Now, when I was touching on automating the transfer and automating your investment, it's just a way of encouraging a good habit for someone who's new, someone who wants to stay consistent with building. I definitely think it's a good thing to have some portion of it out of your control. And, you know, one thing that has really benefited me on my investing journey is that I've never tapped into my retirement accounts, taken a loan, or just tried to take in the penalty and taken the money out. And I'm not to say that I haven't been gone through periods of time when I was carrying debt. I was, but I think that was a better choice, and I've gotten myself, you know, out of it. But I hear so many stories from people, or, you know, sharing with me that, you know, they needed the roof, they needed the furnace, they needed the air conditioning went out, whatever substantial thing came up, and they're looking at their retirement account, the largest sum of money that I'm sure that they've ever seen growing and building with their name attached to it. And so they tapped in. And I did a video a while back using that same investment calculator, and I wanted to use it as a way to share and to highlight that you taking $10,000 or $15,000 out of your retirement account, don't tell me 20 years down the line, yeah, back in whatever year I had to take $10,000 out. No, you're cheating yourself on something so much more substantial than 10,000, because that money was invested. You've now interrupted that power of compound interest, and you're cheating yourself by such a substantial amount more than what you're calling it today, what you're calling it 20 years down the road. It was going to turn into so much more. So never think of it in that way. SMH has done great because of the AI movement. Yes, definitely has. Sorry, I have to run. Okay, one of my major supporters is live. All right, well, thank you for stopping through, Belt Loop. Would say again. Yes, it depends on the account. I definitely have had, there's some accounts where I don't mind having more cash sitting there than others. As long as I'm getting a good APY, I don't mind having cash at my brokerage account as opposed to my high yield savings account. All right, I'm just taking a look through the chat. Let me know if anyone has any more questions, comments, things that you would like covered in upcoming videos or live streams. Again, happy Father's Day to all the fathers out there. And have the notification bell on for any pop-up lives. But I do try most of the year to stick to my Sunday, 3 p.m. Eastern Standard Time time slot. Okay, I'm going to just take a look and see if Investing with Rod is still live. I thought I saw him live. All right, so thanks for tuning in. I don't see any more comments or questions coming in. I'm going to share a link of a fellow content creator that is currently live. If you want to go ahead and jump over there and continue listening to some more stock market related information, you can do that and let him know that you came over from Lisa J Stock's channel. And we're going to end with one of our standard signature sign-offs. So let me go and choose a song for tonight, and I will see you guys soon. Thanks for tuning in.
And to investments, she make a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay. She'll make it pop. If you wanna make some money, visit Lisa J Stocks.